Hello traders, this is Fal Dollar Market Analyst for City Index. Today is the 1st of October. So the US government shutdown officially began overnight, and we've seen a drop in US dollar with US index futures also dropping. But it's not totally risk off because European markets are rallying. In fact, the FTSE has hit a new record high today. But the US dollar is down and it could take another leg lower should today's economic data disappoint. We should get the release of the ADP private sector payrolls report soon. This is expected to come in at around the 50,000 mark, a touch lower than the 54K print in the previous month. We're also expecting the ISM manufacturing PMI to come in today. This is expected to have improved slightly, but still remain below the 50 level at 49. Unfortunately, because of the government lockdown, we will probably not get the release of the monthly jobs report on Friday. And the same could be said about the unemployment claims on Thursday. Now, with these economic reports unlikely to be released, the Fed's projections of interest rates are not going to change, are they? For that reason, the market's expectations for 2 more rate cuts this year will likely remain in place. And for that reason, we could well see the US dollar weaken further. Now, the US dollar against the Japanese yen has moved overnight, falling below some short-term levels. And now it's testing 147, which is the next level of support to watch because this level was pivotal in the past before we reclaimed it a couple of weeks ago, which led to a bounce towards that 150 handle before the selling resumed. With 147.50 broken now, this black line here, this was the most recent support area. The short-term path of least resistance is now to the downside. If more support levels like 147 break down, then the selling could gather pace and we could potentially see a return to 145, possibly the low 140s as well in the weeks ahead, given the fact that the Bank of Japan is seen hiking interest rates at a time when the Fed is cutting. So the yield differential should narrow in the favor of the Japanese yen in the months ahead. And that could put upward pressure on the Japanese yen across the curve, and especially against the US dollar, given the Fed's stance. So it looks like the dollar yen is heading lower from here, but as traders, we should be prepared for both sides. So first level of resistance to watch is now at 147.50. Above that, 148.65 is the key area of resistance to watch, given that this area was previously a major support and resistance zone in the past. Above that, then there's nothing significant until that 150 handle. In the equity space, the index futures are down for US markets, but Europe is higher and some of the major indices look quite strong. The FTSE has hit a new record high today. But looking at the German DAX index, this too is looking quite promising for the bulls, given the overall bullish price structure. Previously, we were looking at this shaded blue area, which was a massive area of support and resistance in the past. And this area held after a number of attempts to break below it failed last week and the week before. As a result, the index has now broken above its short-term bearish trend line, paving the way for potentially more gains. And so far, it looks that way, given the short-term structure here, with the index breaking above this area of resistance at 23,720-ish and holding above it, as you can see. And it has now moved above the 21-day exponential moving average, giving us a non-subjective signal that the bullish trend has resumed. From here, 24,000 was my first target. It has now touched that level. And beyond that, we could be talking about 24,200 next, and 24,500 is the next key level of resistance to watch. And then there's nothing significant until the July's all-time high of 24,650-ish. So the path of least resistance on the German DAX index is clearly to the upside from here. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.